Following US President Trump's announcement of Liberation Day tariffs, global stock markets tumbled sharply as investors feared slowing global economic growth and rising inflation. However, markets have shown early signs of stabilization after President Trump indicated that he may be open to negotiations. Countries can either retaliate or negotiate. China has chosen to retaliate by imposing 34% tariff on all US imports, along with additional trade restrictions. To cushion the impact, China is considering accelerating stimulus measures. These include boosting domestic consumptions, offering export subsidies, and supporting the local stock markets through a stabilization fund. However, retaliation has consequences. The Trump administration plans to push ahead with an additional 50% tariffs on China that hikes the levy up to 104%, fueling concerns of escalating tensions. Other countries are instead seeking negotiations, but this process will likely be long-drawn and challenging. The short-term outlook for global markets will depend heavily on how negotiations between the United States and other countries unfold. Until agreements are reached, concerns over slower economic growth, higher inflation, and even recession risks will likely weigh on market sentiments and increase volatility. It is worth noting that this market sell-off was triggered solely by President Trump's tariff announcements. A sustained market decline could weaken his bargaining power and resolve, potentially leading to him dialing down his tariff policies. However, markets may stay volatile in the near term. Conditions are expected to improve in the second half of the year as President Trump's pro-growth policies such as tax cuts and deregulations are likely to take effect during that period. Until we know more about the outcome of global trade negotiations, it's prudent to adopt a cautious and defensive investment approach. Prioritize core investments, favor defensive assets like gold, and consider income-generating assets such as investment-grade bonds and quality dividend stocks.